Hello, investors, and welcome to Market Pulse from Stock AI Insights. I'm your chief AI analyst. Now, just a quick reminder, this is for educational reference only and not investment advice. All investing does involve risk. Okay, let's jump into the U.S. Stock Market Pulse for Monday, November 17th. The bears were definitely out to play today, and the big question on everyone's mind is this just a little turbulence, or are we heading into a much bigger storm? And wow, this number really tells the story, doesn't it? The Dow took a major hit, dropping over 557 points. That is a loud and clear signal of some serious selling pressure to kick off the week. And it wasn't just the Dow feeling the heat. The pain was spread all across the board. The S&P 500 was down nearly a full percent, and the tech-heavy Nasdaq fell right along with it. This makes it 3 down days in a row for the major indexes, and you can really start to feel that investor confidence is fraying at the edges. So, what's driving this sea of red? Well, it's really a two-part story. First, all that optimism we had last week about the Fed maybe, just maybe, cutting interest rates? Yeah, that's kind of vanished into thin air. Just a week ago, traders were pricing in a 62% chance of a cut next month. Today, that's plummeted to just 45%. Then you mix in a heavy dose of anxiety ahead of some huge earnings reports, and you've got a recipe for a pretty nervous market. This right here perfectly captures the mood. It feels like everyone is just bracing for impact, holding their breath. And what's this big storm everyone's watching? Well, it's the most important earnings report of the season, and it could either pour fuel on the AI rally or put the whole thing on ice. But hold on, it wasn't all bad news today. In fact, we got a bombshell piece of news that went completely against the grain. It was a totally unexpected move from the Oracle of Omaha himself, Warren Buffett, and it sent some serious shockwaves through the market. Now, you probably know the Buffett playbook, and this quote pretty much says it all. Berkshire Hathaway is famous for its super long-term, value-first approach. They love stable, predictable businesses, not typically the kind of company you see chasing the latest high-flying tech trend. And that is exactly why this number is such a jaw-dropper. A brand new filing just revealed that Berkshire Hathaway has plowed nearly $5 billion into a new stake in Google's parent company, Alphabet. I mean, just look at this contrast. On the one hand, you have Berkshire's usual suspects, consumer goods, banks, you know the drill. On the other, Alphabet, a pure-play tech giant right at the heart of the whole AI revolution. This isn't just a small change in strategy, it's a massive pivot and a huge vote of confidence in Alphabet's future. And the market's reaction? It was immediate. While pretty much everything else was bleeding red, Alphabet's stock shot up over 3% to hit a new all-time high. It just goes to show you, even on a terrible day for the market, a stamp of approval from the Oracle still carries a ton of weight. But as exciting as that Buffett news was, it couldn't keep the market's attention for long. Everyone's eyes snapped right back to that approaching hurricane on the horizon, and its name is Nvidia. You see, their earnings report this Wednesday isn't just a report card for one company. No, it's become a litmus test for the entire AI-fueled rally. And that brings us to the question on everyone's mind. Have we finally reached a tipping point? There's a growing sense of skepticism out there. People are looking at these sky-high tech valuations. They're noticing that only a handful of huge stocks are doing all the work, and they're starting to ask if all this massive investment in AI can really deliver the goods. And it's not just talk. We're seeing some pretty big warning flares go up. You've got major players like Peter Thiel's fund and SoftBank quietly heading for the exits. I mean, they've sold off their entire positions in Nvidia. Add that to the fact that Nvidia itself dropped nearly 2% today, and you can understand why the anxiety is so high. Now, with all this talk of red ink, it's important to remember that the market is never a monolith. Even on a rough day like today, there were some real pockets of strength. Individual companies with their own good news that managed to swim against the current. Let's take Tesla, for example. The stock actually finished up over 1%. The catalyst? A really bullish note from an analyst at Stifel who hiked their price target, pointing to the huge potential in Tesla's AI-powered self-driving and robotaxi businesses. And then you have this incredible story in biotech, Zymeworks and Jazz Pharmaceuticals. Their stocks absolutely exploded, soaring 29% and 20% after they announced positive results for a new cancer treatment. It's a great reminder that sometimes a strong company story can win out. So that was today. What about the rest of the week? Well, you might want to buckle up because what happens in the next 72 hours could seriously set the tone for the market for the rest of the year. We are at a crossroads, and a few key events are going to tell us which direction we're headed. Okay, here's what you need to have on your calendar. Wednesday is the big one. After the market closes, we get those all-important Nvidia earnings. On the same day, we'll also get a peek inside the Fed's thinking when they release their meeting minutes. Then on Thursday, we finally get the delayed September jobs report, which will give us a much-needed read on the labor market. And that brings us right back to the million-dollar question. Are Nvidia's results going to be enough to calm these choppy waters and get the AI rally back on track? Or will any little hint of weakness be the thing that finally unleashes the full force of the storm? Pulse verdict, the market is on a knife's edge, caught between a surprising vote of confidence from a legend and a deep, growing anxiety about the future of the AI boom. We'd love for you to share your thoughts in the comments, and we'll see you in the next episode.